In recent weeks, and particularly after the CBN stopped forex sales to the Bureau-de-change operators a month ago, the value of the Naira has plummeted sharply, with the gap further widening between the parallel and the NAFEX rates. Before the ban, the local units traded at around 520 Naira to a dollar, but fell to about 570 Naira to a dollar as at Friday, 17th of September 2021. However, in an apparent contradiction of its earlier stance on floating the Naira, the Vice President, Professor Yemi Osinbajo, has prevailed on the Central Bank of Nigeria to allow the currency to reflect market realities, as this is deterring investors from bringing foreign exchange into the country. It will be recalled that indeed the VP's call is coming several months after the IMF, that's the International Monetary Fund, and the members of the organized private sector told the federal government to get rid of premium paid on the parallel currency market and clear a dollar backlog that has hurt public credibility. Both the International Monetary Fund, IMF, and the World Bank have urged the government to provide a clearer and more predictable foreign exchange management system. To discuss this, of course, and more, and to analyze it, I have joining me live via Zoom a macroeconomist and fixed income analyst with Chapel Hill, Denham, Mr. Michael Ogunremi. Thank you very much for your time, Mr. Ogunremi. Good afternoon.
Good afternoon to you.
Yes, let me start with saying that some analysts argue that what we are experiencing in the foreign exchange market is largely the consequence of CBN's policy choice of a fixed exchange rate regime and the administrative allocation of forex. It is a policy regime that has created huge enterprise around foreign exchange round-tripping, speculations, over-invoicing, and all of that. Do you share this sentiment, and what do you make of the trading value of the Naira so far? It's a two-in-one question, I know.
Yeah, so I think the safe point to start off the discussion would be to say that the current FX system encourages rent-seeking activities. If you look at, the premium we have between, the parallel market exchange rate and what obtains, in the other windows, FX windows that we currently have. Because of that wide gap, what you've seen is a buy low, sell high syndrome, and a whole lot of speculative activities by participants in the market, all wanting to, cash out gains from the system. And it's interesting to say that as long as the system is in place, people will continue to exploit, the arbitrage opportunity. You can't create room for arbitrage and not expect people to want to, exploit that advantage. And it's really going to be very difficult. And so when you then consider the fact, that the system is in place and the fact that, people, continue to exploit arbitrage, it sort of justifies why we had, the call earlier this week for the CBN to devalue, the Naira and make it, reflect what the markets currently wants. I would also like to state that what we're currently seeing, is CBN trying to control both pricing and supply as far as the Naira is concerned. And there is always a trade-off between trying to manage price and trying to manage supply, especially in an economy where you have no control over the demand for FX. And so the normal thing would be for the CBN to pick one. Either you take full control of supply, or you take full control of price by simply fixing exchange rate and allow supply to route through, to the markets. And in as much as the CBN is trying to manage both of them, they would find it extreme. They would still find it, difficult, to achieve both goals, managing supply and as well, keeping the Naira within the desired rates that they want it to be. Now, in terms of what the fair pricing of the Naira is, in my opinion, I think the Naira is fairly priced, currently maybe between 550 and 600. Because if you check the last time the CBN released quarterly statistical bulletin, they stated that when you use a relative purchasing parity method, Naira is priced around 460. Between March and now, it's about 6 months, and a whole lot has happened. So safe to say that the Naira is currently priced between 550 and 600.
Some also believe that the responses of the central bank largely amounts to, well, some will say tackling the symptoms of the problem rather than dealing with the causative factors, insisting that the CBN does not seem to believe or trust in the market mechanism. Now, how would you validate this, tallying it to the statement of the Vice President that forex demand management strategy adopted by CBN needs a rethink? I know there have been ups and downs with regards to this statement, but what do you make of all of this?
Okay. So, I mean, what we've seen, what's currently obtained as far as the FX system in Nigeria is concerned is a false display of a free market system in terms of pricing the exchange rates. Normally, the ideal thing would be for, the currency to stay afloat and allow the forces of demand and supply determine what the pricing should be. I mean, that kind of a scenario, what you would have is demand will find its real place, supply will find its real place, and price will also find, its actual value, and everyone is satisfied. But what we currently have in Nigeria is a managed float system where, like I said before, supply and price is being regulated and demand is just, haywire. Now, in terms of devaluation and how it fits into all of this, I'll say that devaluation is not necessarily an evil, and it's also not necessarily good. It all depends on the context of the economy. Nigeria is an import-dependent economy, and in economics theory, the belief is that when you have the devaluation, it could hurt an import-dependent economy, because the prices of the goods that have been imported will be expensive. But it's also important to say that regardless of this belief that devaluation can hurt the economy, I do think that if we are able to push out our export, so devaluation sort of also supports exports. Yes, quite right, imports will be expensive, but exports are cheaper, and it means that if we can push out more exports abroad, we can sort of sell more and get more effects for our economy. But depending on what the elasticity of the products we're selling is, and so when you think about it, I don't think devaluation is necessarily wrong, which is why the Vice President is also canvassing for it. But a very big question would be that what rate are we devaluing to? So yes, we're supposed to devalue, but to what rate exactly? And so the point would be that we should devalue to where foreign portfolio investors would want the markets to play, because most times what we've seen is that our episodes of devaluation is always trying to play catch up to what foreign portfolio investors want, but it does so at a very slow pace. So investors could have been demanding, for instance, 500, and then when we devalue, we're devaluing maybe to 450, and so we still have a wedge. So even if we're going to devalue, we must devalue to the levels that FPIs want, which in my opinion I think is between 550 and 600. And I think in the long run, regardless of what the short-term impact of devaluation is, I think we'll be better off for it.
Moving on now, government and the CBN has also been very cautious of that term, Naira devaluation. Financial experts and any proposal for further devaluation of the Naira will worsen the already fragile economic situation. You alluded to that. What do you think that this can also push inflation to about 25%, if not more, in no distant times? Do you share these sentiments? When I look at inflation, I also look at the effect of energy price.
Absolutely. Inflation is not driven by one factor in Nigeria. Inflation in Nigeria is, some people think it's cost push, some people think it's demand pull, some people think it's structural. For me, I think it's a blend of all three, right? And so, yes, there's a very strong pass-through as far as exchange rates and inflation is concerned in Nigeria. Most times whenever exchange rates depreciates, you see everybody, including people who don't even use dollar to buy intermediate inputs or whatever that they sell. You see everybody trying to hike the price, justifying the fact that dollar has increased. Interestingly, you see a landlord who has built his house for let's say 6 or 10 years back, which increases rent because dollar has increased. So there's a stigma that comes with FX depreciation in Nigeria, and so the claims are right that yes, if we devalue the Naira, it's very likely that inflation would increase. But then I would say that number one, like I earlier admitted, inflation is not just driven by FX. FX contributes to it, but there are also a lot of key factors, that drives inflation, which if managed can sort of reduce the pressure that FX would contribute to inflation. Then there's also the point that the solution to Nigeria's FX crisis is not even just devaluation. So you have to ask yourself, in as much as this government wants to continue to operate and manage float system, it is imperative for them to get a stable source of FX. It is quite interesting that we continue to rely on oil, a commodity that we do not have power over its pricing or the quantity that we sell. We continue to rely on it as a major source of FX. It's not. I think it's counterintuitive, and I think that the best approach would be to find some sort of stable, normal revenue sources. And I don't even mean taxes. My focus will most likely be on the agriculture and manufacturing sector. To look for opportunities within these two sectors to drive a stable source of FX. But in terms of inflation and exchange rates, yes, the claim is true. But I do think that if we must devalue, let us devalue and achieve whatever goal we want to get out of it.
Now, almost finally, in an attempt to stabilize the Naira, the CBN has taken up a lot of measures. We heard also the VP talking about the federal government being in the MSME space and the CBN also interfering in that space or intervening in that space. Let me use that word. Now, do you see any contradiction or do you see them competing one way or the other? Monetary and fiscal side should complement each other. How well are we doing that in this part of the world, particularly as we get out of the effects of COVID-19 pandemic?
Look, the truth is that the CBN is doing too much. CBN is doing quite a lot. They're into manufacturing, into health, into almost everything, right? And then sometimes you ask yourself the question: so what exactly are the ministries doing? So I would say that if the ministries are really doing so well, I don't think the CBN would want to take up their responsibilities. And so it's a call. It's a call for the ministries, departments, and agencies to own up to their task. Key performance indicators should be set for these ministries and departments, such that whenever they are coming to present their budget for the next fiscal year, the committee asks them, how well have you achieved the KPIs we set for you before? If we have this kind of a system, it keeps them on their toes, and then you don't have the CBN coming into their space to sort of take up their task. As far as I'm concerned, in the macroeconomy, there are six key goals to achieve, and when you look at the monetary and the fiscal parts and the fiscal policy, the role of each of them is clear. There's economic growth, which, in my opinion, I think is largely driven by the fiscal sector. There's interest rate stability. Monetary policy is in charge of that. Exchange rate stability should be the CBN as well. Price stability should be the CBN as well. But goals that has to do with full employment, economic growth, positive or favorable trade balance. These responsibilities should lie with the fiscal arm of the government. And so I think that there has to be this delineation of tasks. There has to be this compartmentalization of who is supposed to do what, and everyone is supposed to own up to their tasks to ensure that the CBN is not perching into the space where the fiscal policymakers are supposed to play.
All right, then, let's see if we can do this in 1 minute. As we wrap up the year, last quarter, what are your expectations regarding as we still see that fall on the Naira? Do we see the future of higher fragility, especially as we are yet to become a strong export nation?
Well, volatility, from a volatility point of view, yes, the Naira will remain volatile till year end, except the CBN decides to use the dollar proceed, about 7.5 billion dollar proceed that it received in the last 2 months to sort of support the economy, because what we've seen so far is the CBN is supplying the market in trickles. And so as at yesterday, the INE market closed above 420, I think 423 Naira to a dollar, which is a new high as far as that market is concerned. If you look at the market as well, the CBN is the one driving the INE market. The FPIs are not bringing in so much. So As far as the I&E market is concerned, I feel like it's going to close off at a much more, depreciated rate, by year end. For the parallel markets, it leaves no room for chance to say that it would also, close, at a very depreciated rate. As a matter of fact, there is no consensus rate at the moment as to where the parallel market is trading. And so I see, the markets, I see the exchange rates, closing, at a much more depreciated level by end of the year, except if the CBN is able to post a supply to this market.
Mr. Michael Ogunremi, thank you very much for your time. I really appreciate this. Macroeconomics and Fixed Income Analyst with Chapel Hill, Denham. Enjoy your weekend.
Thank you very much.